Good morning, everyone. Time for some crypto chart time, I think. Thanks for tuning in if you're watching. And if you're watching this on the replay, thanks for checking me out. My name is Order Block Assassin. I'm Chris, and I am here to look at charts, look for trades, and teach you guys a little bit about supply and demand as I understand it, as I trade with it. And you can follow me on my journey from $100 to 100K. We started with 100 on this fresh account. We are up to 500 and looking for the next trades, looking for my next opportunities. Now I do use supply and demand. We do use smart money concepts, and I have 5 rules, 5 very important rules to consider when I take a trade. And I'm just going to go over those rules before we look at the charts. Wait a minute, I don't have those rules on this on this page. The rules are only on my screen share. So let's share my screen. Whoops, that's not the one. That's the one. You can see rule number 1. Rule number 1. Shorts at premium prices, longs at discounted prices. So what I like to do with my charts is I draw a line down the very middle of my chart. Across the middle, separating the top premium prices from the bottom discounted prices. And when we're at the bottom, we're looking for longs. When we're above, in the top zone, we're looking for shorts. Rule number 2, we're never going to be trading around 50% of the range. This line that I drew, that's smack bang on 50% of the range. And Bitcoin is nearly always in a range. When the price is not in a range, the price is moving. So we never trade around 50%. This is like a dead zone. Price is fluctuating way too much to predict smart money movements here. So we skip it. Rule number 3. Rule number 3. Rule number 3 is we must trade to the next order block, the next reasonable order block. We shouldn't be looking at trades that are, way out there. We've got to take into consideration the next order block step, and that step must bring a risk to reward ratio of 3 or more. Otherwise, we're not in it. We're not interested. We don't want small trades. We want trades where we are minimizing our risk and maximizing our profit. Rule number 4, my stop loss will be 25% of the order block that I've identified as my starting block. And I want trades where if I'm wrong about this trade, my bias needs to shift from whatever it was to whatever it is, whatever it is now. Sorry, I just had a hiccup. It's not been long since breakfast here. Alright, what's my next rule? Rule number 5. I do not trade against my own BTC bias. So if I think Bitcoin price is going to come down, I don't pick out another coin and go bullish on that. If I'm bearish on BTC for today, we're not looking at bullish trades on any other coins. We are looking for trades to follow my BTC bias, my Bitcoin bias. So yesterday I identified a pretty cool Matic trade. Sup, Rich off Crypto, thanks for joining me. Thanks for coming on the channel. Yesterday I identified a Matic trade. I saw some of my mates are in it. I got jelly because it looked pretty good. They got in at this point here. Oh, thanks, mate. Thank you very much. It's lovely to be here. It's awesome to be here. I've still got rule number 5 up, don't I? Let me get rid of rule number 5. Now they got in down here. It was a pretty good trade, I got to admit. It was a pretty good trade, but it didn't fit my rules for myself. I can't go long here on Matic if I was going short on BTC. I'm not going to cross the streams here, okay? I'm not going to cross the streams of my trades. That's just a silly idea. So this particular trade, I didn't take, but I wanted to know what it would have been like, so I paper traded it. And I can see here what it looks like is happening on on Matic at least, is we've got a lower high. So we've had a high come in, and now we have a lower high. To me, this looks like a swing failure. To me, this looks like we're coming back to the baseline here, back to origin. Just like our smart money concepts do predict, if we have a strong move up off a baseline, we will return to origin and hopefully have a stronger move coming up. So I am waiting. I am waiting for Matic, and I'm taking that trade off the table. So today I want to go through what I think is about to happen for Bitcoin. I'm going to tell you how I'm going to play this. I just want to show you my trading account. I have taken, or I should have taken, or I am about to take all of my trades off the table. All those orders are now gone. We're starting again today. Over the past couple of days, I think I got a bit too excited and I overexposed myself in terms of risk. I had 3 coins that I was looking at. I had ETH, I had Matic, and I had Bitcoin, and I do not want to risk this. The way that I'd set myself up was so that on ETH, even if I was asleep, I would have taken the trades in my 3 zones here that I'm looking at. Okay, the 3 zones that I'm looking at is the 50% to 60% retracement, which is this level right here. This is the level I think we're going to get to before we shoot off again. Barring that, if we come through my stop loss, we'll be hitting this zone here, which is my second key level of retracement. I think we're less likely to hit here. And perhaps if we do, the price will come right through and retest the bottom. So rather than taking this trade, because this is my middle trade, I'm just going to leave it off the market for now. I'm going to wait to see a price action come in, and if it does break through this trade here, I'm going to wait to see if it breaks through this trade. Because remember, what I'm looking for is the price to come into my zone. I'm looking for a rally. Sorry, not a rally. I'm looking for a base. It's going to come and drop. It's going to create a base here. It's going to create a rally up. And that rally up is a sign to me that this is a good level. That's when I put my long. In my original spot, I wait for the return to origin and the price to shoot off. Smart money concepts. This is what we're doing. This is what we're here for. This is what I've trained for. This is what my coach has taught me. This is what all my training has taught me. So I'm going to follow my rules. That's why I'm here on Twitch. I'm not here on Twitch for you guys, but I do love having viewers. I love having followers. It's great. It's really great that you can watch me learn this too. I'm here to keep myself accountable. Because if I trade by myself, I find myself taking way riskier moves. So I'm here to document my process, document my thoughts, hopefully teach a few people a few tricks, teach a few people what smart money concepts actually is. It's not what you see on YouTube. It's not a painless way of trading that you're guaranteed results. You need to actually understand the whole concept of smart money before you can actually get those results. And the biggest concept is risk management. And order blocks. I know a lot of people hear the word order blocks and they're like, yeah, these order blocks are magical parts on the chart where we can make loads of money. Well, they're not. Order blocks are everywhere. Order blocks are absolutely everywhere. And it's not the order blocks that we're looking at. Okay, we're looking at 2 different things. We're not looking at order blocks. We're looking at supply and demand. And we're looking at... what are we looking at? We're looking at... what's the word here? I just called a blank. Bloody Sunday. I'm still foggy from my sleep. We're looking at... Yeah, pretty much that. Supply zones, demand zones, and we're looking at the order blocks within those zones. That's what we're looking for. And to find out which supply and demand zones we are most keen on, we're looking for big moves up or big moves down off those zones, but we're also using our fib to target 50 to 70% retracements. We're looking for discounts. And we're looking for discounts in our discount zone. We're looking for premium prices in our premium zone. So, what do I think is going to happen? Why did I take all of my plans off the table? Well, looking at the DXY chart today, I'm expecting tonight to see us bounce up and retest a higher zone, and I'm thinking the Bitcoin price is going to come down. When the DXY goes up, Bitcoin goes down. And I've been waiting for this for a couple of days. We've had a little bit of a peak up here, and Bitcoin's come back down. What we have here in the DXY is we have a demand zone. It's formed here for a while, and we've dipped into it a bit. We've dipped into it a little bit. Every time we've dipped into it, We've had a good reaction off it. Not a good reaction for Bitcoin, but a good reaction for price dips. Because remember, when the price goes up in the DXY, the price goes down in Bitcoin. That's what we've been seeing. So I am looking at this demand zone here on the DXY, and I'm thinking if we dip, or even if we don't dip, we at least will probably come back and retest this higher upper boundary here. The reason why I think we'll retest this boundary is because we've had a solid history of base drop, base rally on this line. So it's a well-tested line. If you were to look at the monthlies and the weeklies, this would probably be a support line. Yes, it is. On the daily, we have a line there. What about the weekly? Not on the weekly, so this is a daily level right here. So I'm expecting this price to come up to this daily level, at least come up here, and at least give it a retest. And I want to show you guys how you can use the DXY to kind of gauge our position in the field. To gauge where the price may have dips, may have ups and downs. I mean, price is random, so it's not going to predict everything, but it's a good indication. So if the price does dip on Bitcoin, where do I see it coming? Well, we're at the mid-level now, and mid-level is this 50% of the zone that I've targeted here. 50% of the zone right here. We have come up. We have come up with a really nice run. Now it's a beautiful run all the way to the 50% zone, and we have had a swing failure here. So I'm expecting a retracement to this level here. Failing that, a retracement to this level down here. And I want to get rid of this now. That's now useless. This is where I'm thinking Bitcoin's going to come to. I think it's going to come down to this 50 to 60% zone. I think the price is going to test in here, and I think it's going to shoot up. And I think we're going to have a bullish run. But depending on how bearish this particular dip is on the DXY, we could see our price come all the way to the bottom of this structure. Because I've got two possible places for Bitcoin, I'm happy to put this trade on and this trade on. Both for an over, this can go even higher now. I could probably target there. 3.8 risk to reward ratio, that's within my rules. And this trade here is a 3.5 within my rules. So they look to me like good trades. If I'm wrong on the second one, then Bitcoin should shoot through, and we'll be looking at Bitcoin forming a new structure, if I'm wrong. But we're not going to try and bet on that. We're not here to gamble. We're not here to try and bet on when there's going to be a price drop. That's not what we're here for. We're here to catch good runs. So looking over at ETH, this is where I had 3 zones on ETH. And where I've started to maybe think about rethinking my ETH strategy. Having 3 particular zones on ETH, don't know how likely I'm going to be to catch them if I'm asleep when this happens. I've set my alarm here to tell me when ETH retraces. Let's have a look at the levels that I've picked. So ETH has had a lovely run, and the weird thing is, Bitcoin's come up, and Bitcoin hasn't quite reached that new high. We haven't broken that structure there. So Bitcoin's not exactly bullish at this zone to me. But ETH has come through, and ETH's broken through this. That looks like a bullish break. That looks like we could be looking for a big run up. So that's interesting. That's really cool. Where do I see ETH? I say, okay, so ETH target number 1, price retraces back down to this 50% zone, bases here, pushes up, and then I get in and we fly. What I would prefer is for ETH to come down to this 60% retracement zone. Give me a massive, massive discount. I love discounts, so yes please, massive discount. And again, we'll see ETH come down into my zone, base, push off, come back, and I'll get in and then rally up. Now what happens though? What happens if ETH just comes through and enters the tip of my trade area and then zooms off? Well, I don't really want to miss my trade, so I'm going to put on this middle one right here. I'm going to put this trade here on, and I think I might do the same for Bitcoin. Nope, for Bitcoin, I'm going to put the bottom trade on. I'm not going to put this trade here on. If I see this trade look good in this zone, I will get in. But I'm not going to put that trade in today. I'm going to put the bottom one in so that if it falls all the way through, I will catch the bottom. Same with ETH. If it falls through this middle one, I'll catch it here. I'll put the bottom trade on there. See, for ETH, yeah, I like this 60% zone even more. I'm a big fan of the 60%. I think that's always a really, really good place to put your orders in, and a 60%. I know I've said that way too many times now. Alright, so the orders that I'm going to place right now will be my lowest Bitcoin and lowest ETH order. Just so if I am asleep, if I am away from the computer, and then price drops all the way to that zone, I will definitely catch those, because what I'm expecting to happen is Bitcoin to come down into the lowest part of its range and then bounce off that. And the reason I'm expecting it to do that is because we have smart money concepts building up here. Alright, we have had a huge reaction. Let's look at the 4-hour chart. We've had a huge reaction of this price right here. A huge bullish reaction, leaving an imbalance down here. So price, if it's going to, price is going to come down and retest this. And we haven't had a return to origin yet. So price, well, we have, but I'm expecting one more. Price has come back down, come back to origin, come back here again. I'm expecting another push off the origin, and perhaps an even bigger one this time. We'll see. We will see. However, we are seeing bearish tendencies overall on the 4-hour chart. So once I get my trade, the first thing that I'm going to be doing is looking for opportunities to bulletproof my trade. And what do I mean by that? I want to make sure, because we're hitting this origin a second time. Now, if we go back through history, which I'm happy to do with you guys, if we go back through some of the history and we look over the last 2 or 3 months worth of Bitcoin at least, we'd see that at this lower end of a structure, Bitcoin comes and hits it 2, 3, 4, 5, maybe even 6 times. And some of those times we go right up to the top of the structure. So we'll hit this origin and hit right up to the top of the structure. It can happen. It can happen. And what I find is the more times we hit this big demand zone down here, and that's what we have here. We have a demand zone. So people, either institutional traders or retail traders, are seeing this zone here as the cheapest price to get Bitcoin. And when the price dips down there, they are hitting that hard. That is a demand zone. People are demanding to buy their Bitcoin at that price. The more times we hit this demand zone, the more chance we have of breaking through and creating a new structure. But this time that we're going to come down and hit it, it's only the second time. If we come back and have a look at our previous structure here, how many times did we hit that demand zone? 1, 2, 3, 4, 5. 5 times we hit that demand zone. If we come look at the previous structure, oh, it even goes way back. Look how long that structure was. And that demand zone that was created with that first dip, that was hit 1, 2, 3, 4, 5, 6 times that was hit. 6 times. Getting weaker every time it was hit. If we look at the previous structure, well, this was a much shorter structure. So we've had that demand zone hit 1, 2, 3 times before it fell through. Previous to that, demand zone was hit 1, 2, 3, 4, 5. You could possibly count these ones, but can't really count those ones. They're just too high up. So even 4 or 5 times. All right, that's my plan for Bitcoin. I want to catch this retracement, and I'm going to watch as the price comes down into the zones. We call these areas of interest. I'm looking for those reactions. So just to remind you of what I'm looking for, just remind myself. I'm looking for price to come back down into this zone here, into this demand zone. I'm expecting price to create a base right here. I'm expecting price to come up out of that base to break structure. And once price breaks structure, I know that we are in for a bullish run from here. My order goes on. I'm taking my order in right where it broke. Price will come back down, pick up my order, and price will zoom up. That's the smart money concepts right there. That is exactly what we're looking for. Now, when we're amateurs, which I am, no doubt, when we're new at this, we do often put our trades in. We put our trades in. I'm willing to put my bottom trade in. This trade I'm going to wait. And there is a risk. There's a risk that the price will come through and not pick up my trade. I might miss it if I'm away, if I'm sleeping. But look, I'm prepared to miss trades. I'd rather miss a trade than have it hit my stop loss, right? All right, so I'm going to pop this one in. I already have this one charted in my spreadsheet here, so I'm not going to rechart it. But my spreadsheet says that we have a risk of $25. So if you're new to, if you know what I'm trying to say here, if you are new to watching me, we are trading not just with smart money concepts, but also with risk management concepts, which means I risk the same 5% of my total account size. Now my account size here does say 400. It's actually 500. I've got $100 in a sub account waiting for me. So my account size is 500. And we're looking to get a stop loss of what did it say? $25. So $25 stop loss is 5% risk at this point. So that's what we're looking for. So we're taking this bottom trade. Just let me confirm this is the bottom trade. Yes. So we can capture Bitcoin if it does fall through. All right, so 58. 58 gives us $25 risk. Reward will be $100. That's a good trade. I'm taking that. If this trade does get triggered, and I'm in the trade, and I'm looking bullish, the plan is then I set my stop loss somewhere way up here, and I actually increase my take profit all the way to the top of the range, and we ride it all the way up. That's what we do. That's the plan here, guys. Minimizing my risk and maximizing my potential profit. This top trade, we're going to wait. I'm going to wait until we see some action down there. For ETH, I'm going to put my bottom trade on for sure. All right, ETH. Bottom trade. Let's go. Let's say 55. Do a long. Take profit. Stop loss can come down a little bit, so we'll try 52, 53, 52. Now I could just use my spreadsheet and have my spreadsheet tell me exactly what to put in here. I could do that. That'd probably be easier. All right, we're going to open that long. Now let's take a look at Matic. We definitely broke that structure there, but we haven't had a bullish structure here. I do think it's going to come down. Where do I think it could go? I think it could go to here again, and I think this might be a good point to pick it up. But I'm going to wait. I'm going to wait and see what structure brings. XRP. We're in the bottom half of the XRP range. This is still a good place to pick up longs. There are two places I'd like to pick up a long. At the bottom of this particular run here, which we could see a potential move up. We got a great trade there with a 4 return on investment, which is well within my rules. If Bitcoin price is going to come down, I'll be picking up a trade here, or I'll be picking up a trade here. That's what I'm looking for XRP. Let me take a quick look at BNB. BNB has done really, really well. We are looking to be in the top half of the BNB range, which is really cool. BNB is almost opposite to Bitcoin. I'm expecting for BNB the price to come up and take these stops up here. The money symbol is where I identify that people have put their stops. And we know smart money likes to take those stops. So I'm waiting for BNB to come up a bit higher, and I'll be taking a short. If BNB comes higher within the next day or so before Bitcoin drops, I will definitely be looking for a short. We could be getting a lower high here. Where could a lower high form? Anywhere below here or here. I mean, look at that big wick there. That was insane that day. So my plan for BNB is right here. In fact, I could probably have a much better trade. Why is this so long? That's what she said. I could probably do this, which would almost guarantee my entry. And that's a pretty cool trade there too. So probably looking at something like that for BNB. Again, I've got two zones. We've got this zone here that it could potentially go to. What I don't like about this zone though is that massive wick. I could put a short on right here. I could definitely put a short there. And look, it's a decent short. Oh, I could squeeze 3 risk to reward ratio there to follow my rules. But I can't put my stop loss above this wick here. I can't do that. Do I ever try trading algorithms? Absolutely not. Well, I mean, look, back in my early days of trading, for sure, I traded with indicators. I traded with algorithms. I did spot trading bots on KuCoin. I've done all sorts of trading. I've lost thousands and thousands and thousands of dollars testing all types of trading methods. For indicators, I spent months and months and months learning the indicators, learning the points, and I didn't do too badly using the Ichimoto cloud. Honestly, I didn't do too badly. It's just, in my view, indicators are not the best way to trade. You're just a retail trader if you're using indicators. And I don't want to be a retail trader anymore. I want to have minimal risk and maximum rewards. I want to learn why stops get taken. I wanted to learn why stops get taken. You know, when you have a really perfect trade set up using your indicators and everything looks great and you jump on in and all of a sudden your stops get taken out and then the price moves to the point you thought it was going to move to. Well, that's smart money. That's people with big accounts. That's hedge funds. That's institutions. That's market makers. And they're not there to make money on your trade. They're there to take your stops. That's really what it is. They're there to take liquidity in and out of the market. And the only way they do that is with your stops, either your longs or your shorts. So smart money uses totally different concept. Totally different concept. And we are the sharks. We are not the whales. Whales come in with their big bags to move the candle up and down and take their stops. We're just looking for them. We're looking for their footprint and we're tracking them. And we're riding the same waves that they create, if that's a good analogy. Because they leave behind big gaps in the chart. And we can see that. We can see exactly where they're going to take the prices to. Retail traders, usually like most of us, are usually on the 15 1-hour charts. But smart money traders, they're on the 8 hours, the dailies, and the weekly charts. They're looking at those for discounts, so we can kind of gauge what they're doing and use their big bags to know where the price is going to be manipulated to. And that concept's been doing really well for me. Really well for me. It took a long time for me to learn. I think I was a bit of a slow learner compared to other people. There were people in my trading group who I feel learnt way better than I did, way faster than I did, and I just kept getting told by my trainer, I'm just not getting it, just not getting it, just not getting it. And a couple of months ago, it all started to click. It was like, bang! Suddenly, I completely understood what I was looking at. And since then, that's why I've decided to stream. Like I know what I'm talking about now. I can get good trades in. But where I struggled was patience. Patience. We have this incessant need as traders to be in a trade, because when we're not in a trade, we're not making money. We're not losing money either. We're not making money, and that's what's important to us. So we have this drive to be in a trade, but we don't need to be in a trade. I'd rather not be in a trade than be in the wrong trade. So patience is what I'm learning now. Letting the price come to me, letting myself read the market, and not needing to be in every single scalp. I'm still going to take scalps for sure, but I'm only going to take scalps when I see that the price is moving in the direction that I'm biased to, that I think Bitcoin's moving, and then I'll take that scalp. You're very successful? Well, look, there's many ways to trade, and all you have to do as a trader is find the style that you like to trade in, find the style that works for you. And yeah, I'm a humble trader too. I've seen people using indicators that do better than I do. They've been doing this a while. They know the charts. It's a language and it's an art. And being able to read the charts in your way is what really matters. For me, smart money was the one that started to talk to me. You know, I started to see the things under the chart, see the information between the lines, and that's what's really helped me. That's what's really helped. So looking at BNB, I will be looking for a short, but the point is where we're looking for a short. So if I use my fib, we can have a look at our fib. We can see how far we've come. Fibs are the only indicators that we're really using, and we're using them as rulers. Looking at my fib, yeah, I can tell why I've chosen this one, because I love to wait for a 60% price retracement, and this particular one right here is sitting right in the 60%. So I'm looking for price to come up, pick up my short, and drop it. But I'm only putting this on if I can see that the price has come up. That's number one. And number two, if I'm feeling like this Bitcoin price is actually starting to come down. So there's two criteria for that BNB trade. Price coming back up a little bit on BNB. And then number two, if I'm seeing on Bitcoin that price is coming down. And right now it's kind of stagnant, right? It's not going anywhere at the moment. It's in this horizontal line. But because we have had a swing failure here, in my view, because we have failed to create a new high, I'm pretty certain, I'm pretty damn certain, price is going to come down. Yesterday I had this trade all set up in Bybit ready to go, but I am not comfortable today with that trade. I'm just thinking I wanted to see what happens. I want to see if price actually sticks here. It probably will. Probably going to see a reaction here. Probably going to see at least a retest. And when I do, I'll jump in. I'll jump in on that trade. The benefits of jumping in, right? This is my trade plan here. This is a 3 to 5 risk to reward ratio. The benefits of waiting is, yeah, you don't always get the same entry level as you had planned. But look, if this was my plan is to take a long there. And I wait. And I see a price move up from this point here. If price moves up, I can put my long in, right? And I can target the order block left behind by this move up, which would be right here. And I can lower my stop to be 20% of that order block. And I can get a way better risk to reward ratio. Look, this is a 6.2 compared to a 3.5. That's the benefit of waiting. You don't necessarily get every trade, but the trades that you get in give you a better reward. And I want to be rewarded better for the trades that I'm in. Don't know about you guys, but I'm always up for getting rewarded better. That's why we wait. That's why we wait. But we don't always get them because sometimes we're sleeping, or sometimes we're at the shop, sometimes we're watching a movie. We don't always get them, but what I can do is set an alarm right here. Alright, I've got an alarm. When the price enters my zone, I should hear a big, awkward, like an alert from this laptop, and everyone in the family is going to turn around and go, what the hell was that? It sounds like a fire alarm. And it's going to click off, and I'm going to go, what is that sound? Oh, yeah, that's my trade alert. We better go look at Bitcoin. Alright, so we've looked at BNB, we've looked at Matic, we've looked at XRP. Anyone got any coins they want to look at? Oops, that's the wrong Discord. Anyone's got coins, let me know. I will take a look at them. We can chart them up. I had a couple of people ask me how we chart from scratch. We can look at that if you want. Yeah, risk to reward profit factor is the key. You're absolutely correct. I can't disagree with that. It is the key. Squeeze in that risk to reward. I mean, if you're going to risk that stop, you want to make sure your reward is at least 3 times your risk. At least. At a reasonable level. And what I mean by reasonable, and I know I don't need to teach you, but for anybody else, reasonable is saying getting at least a 3-to-1 risk to reward ratio on a point where your trade is likely to hit. If your trade is only giving you a 3-to-1 and you're looking up here where there's just no evidence to say that price is easily going to go there, well, that's not a good trade. It's not a good trade. You need to be getting a 3-to-1 risk to reward ratio on a price that you can actually achieve. And at this point, we've got some resistance right here at the 50% of the price structure. We have some resistance here. If I can't get a 3-to-1 trade there, what's the point? What's the point in risking my stop? And I know if you're like me and you're creating a small account. So my challenge here was to see what I could do with a $100 account from scratch. That was my challenge. And if you're playing with small money and you're thinking, you know what, fuck it, it's only 20 bucks. That is not the way that you win at trades. You need to be treating each trade as if that's $20,000. As if those are your last $20 ever and you're done. You know, otherwise you're just gambling. So defend your profits with gusto. Right? Defend your profits. Don't think small either. If you're just starting out, if you're testing this out and you're doing smaller trades and you're like, don't worry, it's only a 1%, 2% risk, treat it like it's big money. Because there will become a point quickly, if you do really well, there'll come a point quickly in your trading where you'll be, protect your capital, exactly. There will quickly become a point where you reach this level where your risk goes up. You're still risking 5%, but instead of risking $25, your margin there is $300-400, and your risk is growing, even at 5%. And think to yourself, if this was a trade where I had gotten 100% of my $300, would I be taking that off the market? I would. A $300 day, that sounds great to me. If my trade could get up to $500, but I can lock $300 in, I'm locking that in. I'm locking those trades in. I'm putting my stop loss up to that $300 mark, and I'm locking it in. I'd rather walk away with $300 in my pocket than a stop loss hit, wouldn't you? All right, let's take a look at KNC. This is a coin that I traded a lot in my early career. I loved KNC. It was growing though. It was in the opposite direction. It was bullish as hell. It was awesome. Where are we now? What would I do here? We got even highs. Even highs. And do we know what even highs means? Even highs is a range, of course. I love ranges. Ranges are great. But we've also got to be mindful that retail traders come in and they see these even highs and they go, booyah! My trade here, and they do okay. They do okay a lot of the time. They're doing okay. Look, they put their short trade in here, put their stop losses all up here, and we don't have a lot of smart money coming in on KNC at the moment to take all that liquidity there. But liquidity is pooling up here. Every time prices come up to this point here, liquidity is pooling. It's growing. We're waiting for a whale or some sort of institution to want to take that capital. What is the capital of a short? Well, wouldn't that be the coin itself, right? And down here we also have capital building, which is interesting because we have these longs right there, but we have a demand zone down here. So what do I think is going to happen? I think price is going to come down. Will come up first. Well, there's two possible things. Price is going to come up, take those stops, or price is going to come down, take those stops, and then go up and take those stops, and then go down further. Oops. Hey, go away. And then that's a disastrous arrow. Let's try that again. Demand zone down here. And clear demand zone. It's so clear that people here aren't even getting into the demand zone. Price is going to either come up, take those stops, and then come down and take these stops. That's option one. Or, oh man, that sucks. Well, is it because I didn't double click my arrow there? Redraw that. Okay, or price comes down, takes these stops, hits this demand zone here, bounces up, takes those stops, really does a number on everybody, because then it will drop. Let me just confirm. I got a thing I look at here. I've got a chart from my yeah, the arrows are annoying, aren't they? What I'm just quickly looking at, I've got a training document from my personal trainer, from my coach. He's just given me some ideas of the kind of structure that we tend to see with support. Yeah, that's exactly right. Stops come down, then okay, yep. Just confirming what I think might happen with KNC. Oops. With the training provided by my coach. And yeah, when we see ranges like this, we're going to see liquidity get taken. And look, if price comes up here, takes that liquidity, what do you think is going to happen if price is coming up here and taking that liquidity here? Well, you're going to have a lot of retail traders going, yeah, we got a bullish run here. I'm going to get in. They're going to put all their stops down here then. They're going to be like, KNC's got a bull run coming. Stops down there. And then smart money comes in and you go, no, actually, I'm taking those stops and the price is coming down here so we can fulfill our shorts. That's how the game works, boys and girls. That's how the game works. I just realized how non-inclusive that is. That's how the game works, everybody. So that's the plan here. I'm not going to be using. I'm not going to be putting trades on KNC. And the reason for that is I'm just not seeing a lot of smart money happening on KNC. And the reason we might be seeing that is purely down to the trade volume. When we're looking for smart money footprints, we're looking for coins with high trade volume. And because of this range, perhaps I'm not really seeing it on KNC. So we'll have a look through on some other coins, see if we can see some other trading opportunities on some altcoins. What have we got here for Solana? All right, let me get rid of my previous stuff. Get rid of my Ray. Rich off crypto. How do you trade on trend lines at all? All right, so looking at Solana, let's look at the daily. We are in severe discounted prices. So this is looking at this since July. Take a fib. Wow, that wasn't what I expected. Did I even do that right? That was not what I was expecting at all. Let's try that fib again from the top of the range. Surely I was getting, wow. Holy shit. Severely discounted prices. All right. So I'm drawing a line down 50% of my chart at the 50% level. Prices for Solana have been in a heavy discount. Divergences, yeah. So divergences are the same things that we're looking. They're not. I used to trade off divergences. We're looking for, in smart money concepts, we're looking for imbalances. But I do know all about divergences. Yeah, that's interesting. For smart money, maybe smart money concepts are for those of us who just like things a bit simpler. I find it simpler. Now that I got my head around it, I find it much simpler. So, it doesn't look right to me. That's supposed to be 50%. That does not look like 50%. Let's just try this one more time. Surely I can't be doing this right. Ah, Fred, how you doing? Nice to see you again. I need a ruler. Where's a ruler? Where do you find the ruler tool? Ruler! Here we go. Rule me from here to here. That's a bit better. I think it was too much of a gap for the fib to be doing any help there. Okay, there we go. That there is our 50% mark. Everything above this is premium price. Am I a Star Wars nerd? Oh, not really. Not really a Star Wars nerd. Obi-Wan comes from order blocks, and I made my name Obi-Wan once I started getting really into supply and demand. Before I realized that supply and demand is not actually about the order blocks, it's more about supply and demand. But Obi-Wan is order block assassin. Not a particular Star Wars nerd. I don't hate it. Don't love it. I like it though. If anything, I'm a Vader nerd. I love Darth Vader. It kind of is. It's a play on Star Wars, but it's also a play on smart money concepts. I just thought it was pretty clever, but I don't know. Maybe it's not. All right. Looking at this chart here, we are in discounted prices on Solana. So we should be looking for longs for sure. And even looking at where we are right now. Can I favorite this? I want to favorite. Can't favorite it. All right, looking at this current price structure here, I'll draw another line. So this is the more immediate structure. We are in the bottom half of the bottom half. So we are actually in heavily discounted prices for Solana. And within the heavily discounted prices for Solana, we're at the mid-level. So in its current price structure, from the 11th of this month until today, we're in the mid-level. In fact, we're in premium prices for this heavy discount. That's the first thing I ever do when I'm checking out a chart, is I figure out, are we premium prices or are we discounted prices? We are in premium prices of a heavily discounted price. So what do we do with this information? Well, this tells us. First of all, if you remember my rules from earlier, rule number 5. Is that showing up? Rule number 5. We do not go against the BTC bias. We do not go against the BTC bias. That's my rule number 5. What's my BTC bias? I think BTC is coming down. BTC is coming down to retrace. Hoping to get that retracement there. Really hoping to get a retracement down here for an even bigger discount. So if BTC is coming down, we should see Sol coming down with it. And it looks like this big heavy demand zone right down here is going to be the place to buy it. So what did you say you were looking at? You were looking at 1180, 1189. Yeah, okay, here's what I'm going to do. I'm going to take a fib from down there to there. See, fib's telling me 1189 would be good. You're in a short right now. Yeah, it's a great place for, you know what? You know what? It is a great place for a short, and that does go within my rule number 5. That's perfect. I'm thinking that Bitcoin is bearish. So this could be a good spot for a short on Solana. Yes. Yeah, that's fantastic. I agree. Yeah, let's look at both those options. So for me, what do we see? We saw on our fib, looking for a 60% retracement. This isn't a good place to go long for me at all. Only place I'm going long is below this 50% line. And I mean, that's a really big top half. I don't want to go long at all, to be honest, because the only place I'd want to go long would be down here at the bottom of the range. Hopefully this is a sign that once this bearish run on Solana is over, maybe we could see some bullishness, but this would be the only area that I'm interested in going long. Going short, however, yep, that's kind of exciting. All right, where would we go short? Nearing the top of this range, there's several options that I can see. The first option, over here we've had a rally up and we've had a drop. Had another rally here. So this particular zone right here, this is the zone I'm looking at. Why? Because this, yeah, good question, why? It's not the biggest zone. I don't think we're going to get enough buying power to make us up to this level of supply. But we do have this level of supply here, which has been taken with a nice big wick there. Your entry was 14,145. Yep, so this is my first option here. I don't think we're going to make it up that high. But if we do get a nice big stop hunt on Solana, that'll be a key entry point right there. Second place I'd be looking at is a big supply zone here. So we'll draw that supply zone there, coming all the way across. What was yours? 14,145. So you got in down here even. For me, I've been looking for a little bit more of a better deal for me. I'm extremely picky, and I like my discounts. So what I'm doing here is I'm taking a fib from the top of my order block here. Let me just go through, double check my order block is the one that the size that I'm after. An order block in a zone that we're interested in is the last up candle before a big drop in price. My fib should be from the top of my order block from the bottom, so I can find where that 50% is, and then my short should be right here. Now, I'm not saying the price is going to come up here. I'm not saying that at all. But if it does, I'm going to grab it. This is a good spot. The price could definitely still come up here and still do a lower high. And we could easily get a 3 return, risk to reward of 3 easily, just even at the top of this structure here. We can get a lovely 5 down here, and we can even get rid of the take profit and see if we can even enter this zone down here, which we could if Bitcoin retraces enough. This is a cool trade. I like it. I like it. And within this price structure that we're in, we could definitely see price come up and take my trade. So this one I'm happy to put on right now, which we'll do. Should we? Let's just triple check this. Let's just do one more thing. Let's just do a fib from this top level to the bottom here. We're in the 60% retracement zone from that peak, which I like. And we're in 60 to 70% retracement from the bottom of our structure here, which I also like. Yep, I like that. All right. I wouldn't have seen that trade if it didn't go hunting. Let's put this in. Solana. I should probably put this in my spreadsheet. Yep. I'm on stream. I gotta follow my rules. I gotta do my homework. What's the date today? The 27th. You see on my sheet, I didn't add any trades yesterday. I just watched while nothing happened. 12 p.m. This is for Solana. We'll do a 25 leverage. We're doing a short. Stop loss percentage on this one is 3.64. You get that just up there. And on my spreadsheet, my price entry, I'll grab that in a second. What was it? What was my percentage? 3.64. And my risk, 5%. So my order cost would be $27. My risk would be $25. And let's grab my entry point. Entry point 14,825 if you're playing along at home. If you are playing along and you do lose your money, well, tough pickies. Just remember, you can't see what I'm doing in my off stream. You don't know if I'm taking this off the market. You don't know if I've seen some price structure that spooked me. So if you are playing at home, it is your responsibility. And I'm not saying this is going to work, but this is the one that I'm taking. All right, from here, let's add this into Bybit. Solana, 1425. The cost will be $27. We're doing a short. And remember, guys, we are treating this as if this is $27,000. Doesn't matter that it's only $27. We are here to improve not just our skills. Whoops. Not just skills, but also technique. 11. And our stop is there. Oops, that is too much. Oh, why? What's my leverage? My leverage is 30. Okay, bugger. I'm going to keep that leverage as 30. I'm just going to, in my spreadsheet, remind it that I got 30 leverage, 30 times leverage, and my new cost is $23. New cost is $23. Which gives me the $25 risk and my potential reward of $137. We're going to open that short. All right. I love that. It's really cool when you can find altcoins. Take profit is, well, I'm setting my take profit to 11,875. But to be honest with you, if I even get to a 3 times margin down here of say $13, I'm probably going to take half profit. Probably. If I see price really zooming down here fast, I'll just leave it and I'll actually move my take profit line all the way down here. Depending on the price action, I'll be taking half profits is what I'm trying to say. Depending on it, depending on how I feel. I will at least, at the very minimum, I'll be moving my stop loss to break even and most likely moving my stop loss to a nice, good profit margin. We don't know exactly what's going to happen when the Bitcoin price does come back down. We don't know how far this will fall. But looking at Bitcoin, if we have had this mark here where we've had a higher high and coming in, we would have stops coming in here. We would have plenty of retail stops coming in here. So one potential move for Bitcoin could be that Bitcoin comes up, takes those stops, looks like it's going higher high, and of course comes down to retest a lower boundary. That is classic Bitcoin move. That's classic manipulation there. So that is what I think may happen with Bitcoin. And if that happens, if the price comes up and takes those stops, which we know they're there, look at that. Even highs. Even highs here, even highs here. There are plenty of stops to get taken. And we also know that ETH kind of did that. ETH has had a bullish upswing here, breaking structure. This is the thing, ETH looks a bit bullish. This is what I'm confused about. Very confused right now. But that could have just been taking these stops. Because we've had stops there. We've had plenty of stops here. But I can't imagine these particular stops still being in the market. Because price moves so far. I mean, there's got to be a few small stops in the market there. However, because we had even highs, or relatively even highs from here, we probably did have stops here. So that's probably what's going on there. Price came down. Price had a relative even high here. And new stops were added. They've been taken out. So that could have been what we were seeing there. We could have definitely been seeing some manipulation. That may not be necessarily bullish indication, but it could be. It could be. So that's why I'm a bit confused. Bitcoin's telling me, hey, we've had a swing failure. Bitcoin's probably going to come back up and test, and then let me pick it up. That's what I'm expecting there. But ETH, you got me confused. Got me a little bit confused. So I'm going to have to watch this market and see where this takes us. But I do like that Sol idea. I like that a lot. And I'm hoping to take Sol all the way to this point here. Let's have a look through some other coins. Let's see if we can find any other gems. One of the coins that I know has the biggest volume is GMT. How are we looking? I haven't looked at this one for a long time. What even is GMT? I'll tell you what it's not. It's not looking great. That's what it's not. Oh dear. I was going to hide my my trend lines. Not my trend lines. Hide my monthly levels and my daily levels. Get rid of all my old drawings. And trade Sol? Yeah. I think it's a good one. I trade whatever. Whatever I see is going in the direction that I'm looking for. It's really cool when you know that Bitcoin may be going down, and you can find a coin that is in its premium prices. That's really cool. That's really cool. It's best when Bitcoin is going in the opposite direction to where it is. What I mean is like down here in Bitcoin's cheapest prices when it's moving up. That's your best bet. GMT, what are we looking at here? Okay, since April, grabbing my ruler, from the top to the middle, from the top to the bottom. Okay. So, since August, GMT has been heavily discounted. Premium prices up here, discounted prices down here. Heavily discounted. Since, oh, yuck. Yuck. Man, this sucks for like GMT holders, I gotta tell you. From September to now, you know what, I'm not even gonna bother with that. That's awful. From October. Yeah, I'll look at XRP after this one. From October through to now, we're in heavily discounted prices. Oops. Where's my ruler? Thanks, mate. I will. I definitely will keep up. I mean, if I'm going to be charting every day, I may as well be streaming it. Somebody might benefit from this. If not me. I mean, let's be honest. I'm here for me. Oh my god, what is wrong with you, ruler? I'm here for me. I'm doing this to keep myself in check. Because I know if I follow my rules, oh my god, what am I doing? And maybe that's just the way rulers work. Maybe they don't stay on the chart. Alright, if I do that, I can, yeah, that's right, they don't stay on the chart. I can just draw a line. Usually I use a fib, but the ruler is kind of cool. Alright, premium up the top. Discounted down the bottom. We're in discounted prices, which means for GMT we should only be looking for longs, and it looks like a very nice spot on the chart for looking for longs. Beautiful spot on the chart. we have got a brilliant demand area right there, sitting within a larger demand zone over here. This is a phenomenal looking trade right here. What would I be doing? I'd be waiting for that to come back down into this price right here. Assuming, now I won't put this on. This is not going into Bybit until I know what Bitcoin's doing. But assuming Bitcoin is going to come back down and go bullish, if Bitcoin goes bullish, I'm putting this one on. So I'll keep this particular chart open because I like that a lot. It's a 6 risk to reward. Usually I'm aiming to stream this time most days, if not an hour earlier. But it's Sunday. I wasn't feeling that great today, so it was a little bit later today. If there has been some price movement, I'm going to be streaming in my evenings as well. It really depends, honestly. It depends if I've been having a couple of drinks or a bit too tired. But if I see price moving, I'm going to come on and stream. I'm going to try and stream whenever I'm actually charting. That's the thing. So I try and chart at least once a day. But if price has some big actions and I find myself making some new orders, I'm going to try and stream them, just so people can see how I run, how I work. Doesn't mean you should work this way. I don't even know if this is the right way of working. I just do what I do. You got notifications on? Oh, thanks, mate. Thank you very much. It's always good to learn how others can read the charts. For sure. There's something we can learn from everybody. We may not all agree on the best ways to trade, but really it's down to what's the best ways for you. What am I seeing here on GMT? Well, we've obviously got lower highs and lower lows forming. I do expect it to come back down to here and it will pick it up. But I'm not going to be picking that up until I've confirmed that Bitcoin is bullish, which hasn't confirmed just yet. Until we get a kickoff and a good reaction off our zones, it is not bullish to me. Even though ETH looks a little bullish. Set alerts? Yeah, I'll be setting those alerts. Thanks for the reminder. Now, we wanted to have a look at XRP. Let's do that. XRP. XRP in the bottom half. So discounted prices. And in terms of this particular range, we are in the top half of the bottom half. I will not be taking any trades below this line here, and I prefer it right here. I think XRP is going to come back down, retest this huge big demand zone here, and push off from that. I know I've targeted here, and even though the price could easily come back down here, there's been a nice big base here, the price could come back down here and fly. I'll be watching that. I'll be watching that zone. So this zone, for sure. I'm watching. What I like to do is I like to put my orders on for the bottom of the range so that I don't miss them. So even though you only trade with mainly trade with automated systems, you have respect for all traders, yeah, and you have new knowledge, yeah. Thanks, mate. I feel the same way. Like I got friends who use indicators and they've done really well for themselves. They've got rules that they follow, and they know what they're doing, and I respect that. They don't always respect what I'm teaching with supply and demand, and I think that's really crap. If it's really, really bad. If you've got a way that you read the chart and that's how you read it and you've done well, it's awful if you think that's the only way to read the charts, because these are numbers and numbers are language. And if we've got a language that we understand, we can trade it. For me, I'm not particularly looking necessarily at the candles. I'm looking at the liquidity sitting on the charts, and you can see it right here in XRP. You can see what I'm looking at. We've had even highs here. Had a high there, a high there, and a high there. I mean, it's plain and simple. I'm looking at the things that aren't necessarily on the charts because traders are coming in, and when the price comes up to this even high, they're putting their stops in. They're putting their shorts right here. And we know smart money needs liquidity. That's what they're here for. They're here to exchange liquidity with whatever they've got in their wallet. whatever they trade, whatever market they're making. So that's why price is coming up and taking those stops. It's going to happen. And with even highs, just let me check. Let me check on my little cheat sheet here. What happens on even highs? This is what we would usually see on even highs. If I can find my even high example. Yep, that's exactly right. Even highs. Oops, where are we? So I won't show this the example that I've got because it is proprietary. It is part of the training that I have been part of for the last 6 months, so I can't show it on stream. When we have even highs, we look for a target area above them, and that's where we'll be looking to take a long. The target area that I'd be looking would be right here. Now we haven't quite reached that level yet in XRP. We may or we may not, but we do know that these will get taken out for sure. Oh, actually, that might not be the area that we'll be looking for. It's quite obvious. That's the area. That's where all of the stops are. That's the bit that got taken out. Once it gets taken out, we're looking for retracement. Retracement could be something that comes from here. Let me get rid of this. We don't need that. Retracement could be down past this zone here, which I think it will. When I'm using my fibs, I like to target the 60 to 70%. Oh, sorry, my bad. 50 to 70%. Anywhere from this golden zone down, and this spot right here is where I would be looking to take a long. That's the spot right there. I'd be looking to take a long. Right up to this zone right there, give me a 3.4 risk to reward. If I'm wrong, then the price is coming back down to the base level down the bottom here, of which I have identified way too many demand zones here. But you can see all those purple boxes, those are demand zones within a demand zone. So this is an area that's going to be really difficult to get below. Not saying that it's going to hold it up. What I'm saying is this is a huge demand zone. People are demanding to buy at this price. And as long as there's people demanding to buy at this, to sell at this price, we're going to see the price bounce. As soon as we run out of those sellers or buyers, people who are happy to buy at that discounted price, well, that's when price will dip. So I'll be looking for price action in there. This is what I'll be looking for again. Be looking for price to take the rest of those stops. And it doesn't need to. It's already taken the stops, but it could also be taking more of those stops. It's going to come back down. We're going to see it base right here for sure. We're going to see it, you know what, let's be realistic. Let's be ultra realistic about what I expect to happen. Let's see how close I get this. I think price may come up again, test this line, base right here at this 50% retracement zone, get people all hot and sweaty about this particular zone, and then I think it's going to break right through there. It's going to base here. We're going to get a break of structure, return to origin, and boom. New higher highs. That's what I'm expecting. But I'm not going to be putting in a trade just yet. I'm going to be watching for this zone here. And I don't want to watch for that zone. How do I get rid of a watch? Delete. Yes, I want to delete it. Okay, so my the second place that I want to be taking my XRP trade will be here. Right here. At the bottom of the structure. With a nice big stop. So this would be a very safe trade. As price does come down, I'll probably put this trade on. I'm going to leave it off the market for now. I don't want to overexpose myself to too much risk because this could all go to hell. If Bitcoin dumps, I don't want all of my longs to jump on at the same time and completely screw me. I've got 3 trades on. I've got my short for Solana, which may or may not get triggered very soon. And I've got my ETH and my Bitcoin long, both in this mid section right here. No, both of them are the lower ones. So all I need to be doing now, all I'm personally doing for the rest of the day, well, not going to sit here and watch the charts all day. I'm waiting for my alerts to tell me the price is coming into the mid zone here, because I want to try and catch these mid zones. Let's draw into Bitcoin what I want to happen for me to take this trade. Take those stops, or don't. If you don't take those stops, it's even better, because then I know the price will take them. I want price to come down here, build a base, have a push off, return to origin, and that's where I'm going to pick up my trade. Then take out these highs here, giving me a 3.38 to 1 risk to reward. Potentially more, because remember, whoops, this is just my plan. When price does come through here, when I see a new order block get created off this structure and I come in, I can reduce my stop loss to a reasonable level, giving me a much better risk to reward. Alright, that's my plan. That's what I'm going to see happening if these alerts come in. So if the price does come in and do what I suspect, I may stream later on tonight. We'll just see what happens. If price is stagnant and nothing's really happening, I won't be streaming later on tonight. But if price does come in and I'm needing to put these trades on, I will stream to put these trades on. Excuse me. But if I'm asleep, then I'm just going to miss them, which can happen. That's fine. I'd rather miss trades than take the wrong ones. And I think that's it for me today, guys. Rich, XRP is your main holding? I don't have any main holdings. USTD is my main holding. Personally, we've had this discussion in our Discord. A lot of people hold coins. I'm struggling to see the point of holding a coin. But look, if I'm going to look at which coin I'd be holding, I'd be taking Solana at this discounted price, and XRP too. Look at that. Even Bitcoin at this discounted price would be great. What's Bitcoin look like overall? I mean, in my view, we could come all the way down to the 10, 11K Bitcoin. We could. If these prices don't hold, I reckon we could come down this far. Why? Why that far? And why not any further? Because to me, this is the point where we had the biggest volume off. So if we're going to come down, this will be the point we really hit, and we hit a really big supply zone. Sorry, a really big demand zone right here. And I think there would be so much demand that I don't think we're going to break it. And I think the push up would be huge. So for me, if Bitcoin gets to like 10,800, yeah, I'm buying a lot of Bitcoin. Well, not a lot. You know what? Not a lot. I'm taking a long. Let's be real. I'm not holding coin. I don't hold coins. And the reason I don't hold coins is I've been burnt. I have lost too many coins holding them in yield farms, holding them in projects. Ugh. No, I'm done with that. I'm here to trade. I'm not here to hold. I'm not like a Bitcoin advocate. I'm not going to be telling you this is the future. It may be. I'm just a trader. Just a humble trader. I'm not going to speculate on technology and projects and these companies who try to tell you that banks are bad and we're good, and then they take your money. No, thank you. I've lost too much on nodes. Strong coins, strong. I lost many thousands on strong. Maybe in the tens to 20s of thousands. Maybe even more, to be honest. Never again. I don't hold. That should be my 6th rule. Rule number 6, I do not hold Bitcoin or any coin. I'm even worried about holding USTD. Well, what if I'm holding all my USTD and we come to realize that they don't hold a one-to-one value like they promise? What's to say that the USTD creators don't have another wallet somewhere that's owned by their sister company that they're using to trade with? It could definitely happen. I'm even worried about that. Nothing is safe. Nothing is safe at all. If USTD was to crash, we would all be effed in the A. and I hope it doesn't. I really, really hope it doesn't. But I know CoffeeZilla had some things to say about USTD back in the day, and I just hope he's wrong. But I trust that guy, and I am very wary that internet funny money is risky. So I'm not holding. Anyway, guys, that's enough rambling from me. You've seen my trades. That's the plan for the day. I'm going to head off and go and enjoy my Sunday. Hope you guys have a great day. Thank you so much for watching. And if you are new here and you're watching the replay, make sure you follow. Follow me and you get notified when I go live. You too, Rich. Take it easy, and I'll see you guys all when I stream next.